So, how was your first day of fall?
First day of fall was good. Work was good. It was much colder today than it was over the weekend.
Yeah,
Yeah,
after the 2 day summer we had.
yeah, we had a nice 2 day summer, and it was colder today. And tomorrow's supposed to be even colder, down to like the 40s, I
Yep.
think, maybe 40, a high of 40.
Yeah.
Anyways, so the fun thing about tonight is we already did a live stream at 6:30.
Yeah. This is part two.
Yeah, and we're covering the exact same topics because apparently the first one did not have any sound, so we won't make that mistake again.
That's a shame for those of you who wanted to be put to sleep this evening.
Yeah. Good news is the first round was practice. So let's get into it. So the first one that I have is that millennials apparently don't see the point in preparing for retirement right now and actually doing the saving, which is kind of horrifying.
Yeah, pretty alarming.
Yeah. So apparently, of the respondents in a survey, 55% said they are putting a hold on their savings for retirement right now. And I'm like, I understand that there's a lot of fluctuation within the market, but this is like the perfect time to just be consistently putting money in,
Yeah.
just dollar cost averaging. And historically, that has proven to be very effective in terms of how much savings and growth you can get out of your money.
Yeah, and millennials are getting older.
Yeah.
So that's rather alarming, really.
Yeah.
It's about crunch time, really.
Yeah. Yeah, because I mean they can range anywhere from yours and my age, which we're basically on like the very rear end of the millennial generation, but 27 to like, I don't know, mid 40s now.
Yeah.
So yeah, pretty significant. Anyways, so they go on in this article from Bloomberg. They show a graph of how the generations are looking at whether and when they can get their retirement savings back on track. It looks like most are thinking it's probably going to take 2 to 3 years, which, I tend to be maybe a little bit more optimistic about that. I think 2 to 3 years is pretty significant. And every time I look at my account, my 401k, it definitely is not growing right now.
Yeah, that's for sure.
But, I'm not that worried about it because I have a good amount of time before I plan to retire.
Yeah.
So, or even before I'm allowed to take money out of the account without having a massive tax penalty.
Yeah, as long as you're looking but not touching.
Yes. Yeah. So then it finishes off by saying that 45% of younger investors are waiting on things to return back to normal before starting savings again. So I think the earlier number was just respondents in general, but younger investors, especially 45%, that's a huge percentage. And then it says that, trying to time the market has historically been a losing long-term investment strategy, which, is a good point to make because a lot of people think that they can time the market. And if you look at the graph of like the S&P 500, you can say, oh yeah, if you time the market right here, then you might make these gains. But if you look at the long term, it's going to be better if you just throw your money in right now than trying to wait for the next big dip.
Yeah, what is normal in the stock market?
Yeah, really. Especially with the last 2 years, like since COVID, it's been up and down and up and down.
Yeah.
So, yeah. Okay, this one is yours.
Yeah, this one's from The Economist, and it's describing pilot shortages in North America and how that might affect travel. And so, yeah, it details how specifically a certain route from California to Atlantic City, New Jersey, in the next slide there, how they're going to basically, instead of getting you 10 miles from your resort, they're going to drop you off in Philadelphia 60 miles away, and you have to ride a bus the rest of the way.
60 miles is significant, especially for a place like Atlantic City where, it's not like Vegas, but there's a lot of people will go to Atlantic City to, do like gambling and stuff.
Yeah.
So the fact that they're potentially going to have to ride a bus 60 miles, I can only imagine a lot of people are going to be willing to jump on. They're going to be willing to pay more for an airline that's actually going to take them all the way to their destination.
Yeah. So that's American Airlines there, and that's allegedly going to start in June. So
already in June.
Yeah. So yeah, that's interesting.
Yeah.
But if you go back to that slide before here, these are a couple of graphs that kind of describe the issues and what's kind of causing this. And a lot of it looks like it's the age of pilots, really, that top graph there, and how they're basically going to be exiting the job force, really.
Yeah, there really aren't that many young pilots. I mean, I understand that it takes a long time and a lot of effort and a lot of training, but still, there aren't even that many pilots that are 30 to 34.
Yeah. It's going to definitely become a problem if you look at that second graph down there, where we've kind of returned to the numbers of travel pre-COVID. So a lot of traveling, not many pilots.
Yeah, and we need a lot of goods that are also carried by airlines. So
yeah,
woohoo for inflation.
Yep.
You already talked about that one.
Yeah, so it goes on to talk about how the industry in North America will be short about 12,000 pilots by 2023, and in 2029, a potential shortfall of 23,000 pilots.
That is significant.
Yeah, it's remarkable. That's what I don't know. That's got to be a large chunk of pilots.
Yeah. Before too long, it's going to be more cost effective for you to go get your private pilot's license and just fly yourself around everywhere.
That's right. Yeah.
Which is, my goal anyways.
It's a good goal to have.
Yeah. I just need enough land for a private airstrip. All right, this one I thought was a very interesting one from NerdWallet, because it actually breaks down more of the deeper psychology, I suppose, behind travel card benefits, and like whether leaving benefits on the table is a good thing or not. And it goes on to kind of show a graph where if you're looking at credit card benefits, frequently you'll see a graph similar to this where it's saying, okay, you've got all of these benefits, whether it's travel insurance or if it's, cashback benefits or, all these types of things, it's worth this much. And if you're only paying $700 for your yearly fee, which is massive in my opinion, that is a huge annual fee.
Yeah.
But according to their graph, you're still saving $700. Well, that's only if you're taking full advantage of all of the benefits that this card, gives. And really the point that they're trying to make is like, hey, you might be spending way more money on just trying to utilize these benefits than if you only get what you need,
Yeah.
So it goes on to say that, yet there's a piece of this math problem that doesn't break down to pure dollars and cents. It's what we mean by value. And it continues by talking about a Chase credit card that has a complimentary DoorDash subscription, which is nice for people who, want to eat out a lot. But it makes a great point of saying that this is a benefit. This benefit carries more value the more you order takeout, creating a twisted incentive if you're trying to cook more at home. So it's basically saying like, listen, you might have priorities that conflict with the benefits that they're trying to offer, which means that even though there's dollars and cents value to that benefit, it's not actually valuable to you because it's taking away from other priorities.
Yeah. The two companies have partnered to make money.
Yeah.
Off of this. So.
Yeah, obviously.
Yeah.
And then it makes one more point about how you can take advantage of benefits and and whatnot. But that doesn't mean, in their words, that doesn't mean that you should bend your priorities around whatever oddball benefits a card decides to include, which I think is a great point to make, because a lot of the benefits that you're going to get from credit cards, even a lot of like rewards debit cards, is benefits to, or, money off to kind of oddball companies that you've never heard of before. And you're like, I don't know if I'm ever going to spend money at this place before. Well, they're going to still include that as a part of the benefits, and the amount of money that you're saving when you're really maybe not going to save that money. All right, this was one of yours.
Yeah, so this article was pretty interesting. Fidelity has decided to allow retirement savers to put Bitcoin into their 401k accounts. So this was something that they kind of had hinted at a while back. We maybe even mentioned it in a video previously, but now they've made the announcement. And the next slide there talks about a guy named Dave Gray. He's the head of workplace retirement offerings for Fidelity. And he basically describes how this will be a way for them to diversify portfolios with the stock market kind of being down, and trying to be more creative. So he details how they're going to allow 20% of your portfolio to be in Bitcoin, which is a large chunk.
That is huge. 20% is massive.
Yeah. It's like, do you want 20%? Yeah, I don't know. Wrapped up in Bitcoin.
Yeah.
Not me, but yeah, I guess they're trying to be creative. And he goes on to say that as of the beginning of when this will take place, it will only be Bitcoin, but that he expects other larger other digital assets to become made available later on. So,
okay. So I wonder if they would ever end up putting like NFTs or something like that in there, because NFTs also are a part of the digital asset class.
Yeah.
So it makes you wonder if they could ever creatively put that into an investment and actually have that make sense.
Yeah, it'll be interesting for sure.
Yeah, it is. I think kind of cool that they decided to add that in there. I think 20% is pretty high for allowing that much allocation of your assets, and that much allocation of your retirement assets. But I tend to be a bit more conservative in my investing. So
yeah,
I'm sure that there are other people that would disagree.
Yeah, I wouldn't want 20% of my eggs in one basket.
Yeah. But at the same time, it is diversifying even beyond where the stock market is, because you've got stocks in different industries, and then you've got like bonds and stuff.
Mm-hmm.
And then obviously digital assets are vastly different than those.
Yeah.
So at least it still provides a bit more diversification for your retirement.
Absolutely.
And this is the last one that I am a huge fan of this article. And what it's talking about is basically that 1 in 4 students in the U.S. are actually going to get financial literacy courses before their graduation here soon, this year. And 1 in 4 doesn't seem super high. I know it's 25%. You're like, 25% isn't that much. We need much higher. We need much closer to 100% of students learning financial literacy. But the fact is, 25% is a lot better than it has been in the past. Like in this article, it goes to talk about how in 2018, it was only 16.4% of students in the United States were actually getting these financial literacy courses. So at least up about 10% in the past 3 years, or 4 years now, I guess, is pretty good. And I'm really looking forward to seeing how this improves in the future, because I think more states are going to implement these kinds of policies and laws in order to get students to be more educated in the financial literacy space before they graduate, which is much needed, because there are way too many students who are allowed to take out massive student loans
with no understanding.
with no understanding of what they're getting into. And then after they graduate, then they realize that they're not making the kind of money that they thought that they would make, and they've got $100,000 of student loans.
Yeah.
So I think that this is pretty exciting, and I'm really looking forward to seeing where this goes. And the article goes on to talk about how 4 states in particular are working on implementing these kinds of laws and mandates, one of which is Ohio. So hopefully our own students here in Ohio are going to get those classes here pretty soon.
Yeah.
And as of about 1 month ago, Florida actually did implement their own policy. So Governor DeSantis signed in a bill for financial literacy class to be required before graduation for students, which I think is great news.
Yeah. Learning the practical stuff.
Yeah. So I have gotten confirmation that our sound is actually good this time. So I'm a big fan of that. At least it's not a silent live stream now.
Yeah.
And thank you for joining in. Let us know what you think about these different articles and news stories in the comments down below. And make sure you like and subscribe. All right, we'll see you in a couple weeks.